Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the stock market, commodity markets, review what went on today, just pretty much all the major events, just reviewing what happened, what we could probably see in tomorrow's trading session, and so forth. So without any delay, let's go ahead and review these key markets. Basically, the US dollar index is selling off. It has continued going lower. And you guys can go ahead and see the US dollar Chinese yuan pair. The US dollar is weakening to it yet again. And the whole point here is that at first China was all about the cheap exports, the cheap exports, the cheap exports, easy money, ways to outcompete globally, da 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 da. Let's get this economy inflated as fast as possible. But now what's basically happening is that the Chinese yuan, the Chinese government, basically wants to get the most purchasing power out of the Chinese yuan. And another thing is that when the US dollar weakens to the Chinese renminbi yuan, whenever they sell products, basically, yeah, they're probably going to get more money, more US dollar, and that's very good. And the main reason why it's good for the Chinese and not so good for the U.S. is because either way, China benefits whether you make the Chinese yuan currency cheap or more expensive. And the reason why it's more beneficial for China to have a stronger currency has to do with the fact that the Chinese people can afford more imports. When they export goods, they receive more dollars in compensation for whatever products they sell. So, and for the average Chinese person that may only earn $800 a month, that's actually very good because over time they get to earn more money, and that's pretty much what's important. Is that if it's pretty much the process that a lot of, I guess, developing countries take before going into an industrialized nation, is that, or a fully industrialized nation, is that the Chinese, I guess China is, I guess, following a similar path to that. And what they're basically trying to do is improve, it's going to improve the amount of money that they earn, but it's also going to reduce inflation to a certain degree. So again, that's kind of what I'm seeing. Another thing is that, of course, investors are flooding into the Chinese market. Therefore, the US dollar is weakening in proportion to the Chinese yuan. Remember, every time you transfer one currency into the other, the currency that you transfer from does weaken in comparison to the currency you're going into. Therefore, that's the other reason behind it. Now, my next stock is Apple. And Apple did have a pretty good day. They did report some really, really good earnings. And, that's good. That's good and all. But for myself personally, I honestly feel that Apple is a bit of a risk still. And I mean, from a multi-year standpoint, I mean, right now Apple is at what, 300, going to be around $320 billion in market cap tomorrow. And, I think a lot of it could be attributed to foreign growth coming out of Apple. But, there comes a point where your product, either your product gets too saturated, or you have a lot of competition. And we saw the same exact thing happen with Microsoft, is that even though they dominated most of the market, their product got saturated, and once a product gets saturated, that's pretty much the end of the story there, the end of the end of the show, and pretty much earnings growth drops. Therefore, what people are willing to pay for an investment drops as well. And right now, I honestly think that if there's any tech stock that's a bubble in the making, I really think that it's Apple. We saw the same exact phenomenon with Microsoft, and Microsoft is still a blue chip stock today. It's not as, I guess, prominent as it used to be. And eventually you'll see a similar cycle come from Apple. Now, with all the competition, with all these factors in place, and the fact that over time, cell phones are going to become less expensive. So as technology does get better, manufacturing does get better, and obviously you choose better components and stuff. Over time, in the world of computing, the amount of bang per buck you get over time actually improves quite a bit. So therefore, I have to say that over time, margins will eventually get squeezed. However, this recent earnings quarter, Apple did did very good on margins, but the revenues did slightly miss expectations, and that's a key point. Typically Apple is the type of company that generally, just generally demolishes revenue top line forecasts, but sometimes they miss the margins because margins are kind of hard to do. Sometimes parts are kind of hard to secure. Maybe research and development costed more money than they were anticipating, or they might have to pay more money for the same components and stuff like that as well. So again, that's what kind of gives me leery for this quarter. They missed revenue expectations, but they did beat out on net profit margins, and overall their earnings have been excellent. But I mean, by next year, I mean, the company has to earn even more money, maybe around 50% from what they're doing right now, for investors to keep bidding up the stock. That would pretty much imply that the company would have to earn around $25 to $26 billion next year, and that's what kind of gets me cautious on it. I mean, over a long period of time, eventually growth stops. Okay, moving on, let's go ahead and review the gold market. Not gold market, but the silver market is booming right now, and that's really, really good. We are most likely going to break beyond $45, but I do think that $50 is not. I mean, I think $50 will probably be touched. I'm thinking along the scenario that silver could probably get near silver, and then a lot of institutions will start selling into it before we ever reach silver. $50 on the level, or either that, or I guess institutions get really greedy. But I generally don't see that type of behavior coming out of institutions. Chances are they're probably going to start taking profits into the $50 area. But again, with what we're seeing coming out of China and the European states, I mean, because Europe, China's doing the carry trade, and they're basically taking their U.S. dollars and putting it into the euro. On top of that, the Chinese government is pushing down the value of the U.S. dollar. Therefore, it's a double whammy, and it's making the U.S. dollar extremely weak. And yeah, but I want to move on from silver. Go ahead and talk about the Chinese ding ding. And basically, heirloom trading kind of mentioned a good point, and in that the Chinese economy is a bubble in the making. I will admit. And what I mean by bubble is that the real estate market is a huge bubble. That doesn't change the fact that wealth is continuing to grow at a rapid pace. Internet users are continuing to grow at a rapid pace. I mean, 2008, 300 million internet users in China alone. I don't know the current statistics on internet users in 2011. I would have to check that again. But China ding ding is growing at a ridiculously fast rate. And of course, I do think that the middle class will continue to get wealthier. It's just a path industrializing countries tend to take. In fact, but China does have some huge social issues, one of them being expensive properties, therefore the average person can't afford it. Chinese government is overbuilding properties, and it kind of makes me think that maybe the Chinese government is doing it on purpose, and once they feel that they've gone to a point where they've reduced inflation as much as possible, they might just sell all those properties off at a fire sale. And basically, you're basically going to have the markets correct itself before the people will revolt or cause issues. But if people start causing issues, and these top brasses in China, the premier Wen Jiabao, is most likely, I'm anticipating, since he has so much control, chances are he's going to sell these properties at ridiculously cheap prices. Therefore, you're basically promoting a middle class. You're switching out their homes. You're basically improving the economy by, I guess, giving people places to live so that they can be more economically productive. And I honestly think that the Chinese government can't afford to do it, mainly because they have around $3 trillion in reserves, and all they're doing is putting them in treasury bonds. And lately, I'm thinking the Chinese government has been, I guess, selling those treasury bonds and taking that money and putting it back into the Chinese yuan, therefore making the Chinese yuan that much stronger, the U.S. dollar that much weaker. And I think that most likely what they're going to do is they're going to promote that middle class as much as possible, but it won't advert a bust in the property market. In fact, I think the Chinese government will contribute to a bust and push down those property valuations at a ridiculous rate. Now, as far as QQ360, I didn't like the stock today. It did fall by 10%, and to be honest, there could be some support in this gap window area, but I'm not really holding my breath. I wouldn't buy it. I didn't like the stock's valuation. It's just an antivirus company. And even antiviral companies or internet security suite companies, the best one that I know of right now that's currently publicly trading is Symantec, which is in the USA. And it has a market valuation of $10 billion. QQ360 has a market valuation of $3 billion. Plus, they're providing antiviral protection for free, whereas Symantec sells it for money. So therefore, I don't really like QQ360 unless they turn around and start selling this product for cash. They don't do that value-added service junk and just sell it and stop acting like AVG and start acting like Symantec. I don't really think that this company will produce the profits necessary to fetch such a high valuation because it's just not going to grow earnings fast enough. Alright, so moving on, I want to go ahead and talk about the volatility index. Volatility index is relatively cheap, but I do think that there's more room to the downside, judging by what I saw with the US dollar index. US dollar index and volatility index have a direct correlation to each other. When both fall, when dollar falls, volatility index tends to fall as well. Alright, moving on, I do want to talk about the ProShares Ultra Silver. I did take some profits off the table today. At least for my short-term portfolio. My long-term portfolio is still exposed to silver with a minor weighting of around 15%. Overall, I still like silver, but before it ever gets to 50, I plan on selling them, just because I don't want to be holding on to it and eventually see some sort of flash crash scenario. You see the dollar go up in value substantially one day, and you see silver go down in value substantially. So again, people are anticipating some really, really negative markets in May. When stocks fall, bonds rise. When bonds rise, dollar rises. When dollar rises, silver falls. And when silver falls, so does gold. And when gold falls, so do the silver and gold mining companies. And therefore, I am really, really cautious on this. I don't want to push silver too much. Maybe 50, but I'm really going to sell it right before we ever reach the $50 mark. Anyway, take care, folks. I'll have more for you guys in the coming weeks and months ahead. Please be sure to check out the link right below this video. And if you guys want this type of content, be sure to go ahead and subscribe, as I will have more for you guys in the future. Take care, folks. I'll go ahead and see you guys next time.